Meaning of agricultural finance. Agricultural finance generally means studying, examining, and analyzing the financial aspects pertaining to farm business. The financial aspects include money matters relating to production of agricultural products and their disposals. Definition of agricultural finance. Murray defined agricultural finance as an economic study of borrowing funds by farmers, the organization and operation of farm lending agencies, and of society's interest in credit for agriculture. Tandon and Dondale defined agricultural finance as a branch of agricultural economics which deals with any financial resources related to individual farm unit. This is the chart which explains the agricultural finance system, which shows policy loan, mutual loan, and commercial loan. Nature and scope of agricultural finance. Agricultural finance can be dealt at both micro level and macro level. Macro finance deals with the different sources of raising funds for agriculture as whole in the economy. It is also concerned with the lending procedures, rules, regulations, monitoring, and controlling of different agricultural credit institutions. Hence, microfinance is related to financing of agriculture at aggregate level. Microfinance refers to financial management of the individual farm business units, and it is concerned with the study as to how the individual farmer consider various sources of credit, quantum of credit to be borrowed from each source, and how he allocates the same among the alternative uses within the farm. It is also concerned with the future use of funds. Therefore, macrofinance deals with the aspects relating to total credit needs of the agricultural sector, the terms and the conditions under which the credit is available, and the method of use of total credit for the development of agriculture, while microfinance refers to the financial management of individual farm business. Significance of agricultural finance. Agricultural finance assumes vital and significant importance in the socio-economic development of the country, both at macro and micro level. It is playing a catalytic role in strengthening the farm business and augmenting the productivity of scarce resources. When newly developed potential seeds are combined with the purchased inputs like fertilizers and plant protection chemicals in appropriate proportion, will result in higher productivity. Use of new technological inputs purchased through farm finance helps to increase an agricultural productivity. Accretion to win farm assets and farm supporting infrastructure provided by large-scale finance investment activities results in increased farm income levels, leading to increased standard of living of rural masses. Farm finance can also reduce the regional economic imbalance and is equally good at reducing the inter-farm asset and wealth variation. Farm finance is like a lever with both forward and backward linkages to the economic development at a micro and macro level. Meaning and definition of credit. The word credit comes from the Latin word credo, which means belief. Hence, credit is based upon belief, confidence, trust, and a faith. Credit is otherwise called as loan. Credit or loan is a certain amount of money provided for certain purpose on certain conditions with some interest, which can be repaid sooner or later. According to Professor Galbraith, credit is the temporary transfer of asset from one who has to other who has not. According to Samuelson, credit is the use of someone else's fund in exchange for a promise to pay with or without interest at a later date. Farm credit or agricultural credit is a count of loan or credit obtained from any source for the promotion and development of agriculture. These are some of the needs of agricultural credit. They are agrarian economic, agricultural backwardness, low income of farmers, uneconomic holdings, storage and marketing, debt, irrigation facility, farmer productivity, interim difficulties, modern technology, unproductive expenditure, agricultural indebtedness in Pakistan, natural climate, civil and criminal suits, and unorganized marketing conditions. Profile of main farm loans. Integrated farm loan, policy loan, mostly for large farm operators for the use of farm purchase, facility installations, repairs, maintenance, and operation. Balance in 2006, TK 2.143 billion. Farm and livestock management loan, policy loan, mostly for small farmers for the purpose of farm and livestock operation. Agricultural mutual fund for all farmers for the use of family living and farm production, a kind of commercial loan. Here comes after the two charts, integrated farm loan system and types of consulting services. Classification of agricultural credit. Lenders classification. Credit is also classified on the basis of lenders such as institutional credit, non-institutional credit. Borrowers classification. The credit is also classified on the basis of type of borrower. This classification has equity considerations. Based on the business activity like farmers, dairy farmers, poultry farmers, pisciculture farmers, rural artisans, etc. Problems of agricultural credit. The problems of agricultural credit are small units, damage to crop and land, low and uncertain yields and incomes, lack of credit worthiness and security, small and large cultivators, unproductive uses, high cost, limited flow of capital to small farmers. Measures to solve those problems. Agricultural credit institution look like Association for Social Advancement ASA, Bangladesh Rural Advancement Committee BRAC, Federal Bank of Cooperatives 1976, Agriculture Credit Advisory Committee 1972, Special Scheme 1977 Extend Credit Amount, Recovery of Loan, Finance in Kind and Supervised Passbook System. Rural Finance in Lower Developing Countries LDCs. Rural finance in developing countries is characterized by what Parth Dashgupta describes is in an inquiry into well-being and destitution as an irony and a tragedy. Banerjee 2003 provides a very useful review for developing rural financial markets. He argues that there is extremely variability in the interest rate charged by lenders for superficially similar loan transactions within the same economy. 1975 World Bank report on agricultural credit, written at about the height of the banks. Thank you.